Alright, so in my last video I went over everything that you need to do before buying a new home, and in this video I'm going to talk about everything you need to do when applying for a mortgage. So first things first, you already know how much you can borrow since you've asked this before you started your search for a new house. See my last video. But now is the question, can we get a better deal from another bank and pay back less every month than we thought previously? So what do? You go back to the first bank and ask them to make the best possible offer for a loan for the house or property that you now bought. With that offer, you go to every single bank that you know and ask them to beat it and give you a better offer. And I know this sounds like a lot of work, but don't be lazy with this because it can really save you a lot of money. To give an example, one of the first rates that we got was about 2%, and in the end we got a 1.56%. Over an amount like 300,000 euros, this is nearly a 19,000 euro difference in when the term of the loan expires. So really worth taking the extra effort now to get the best possible deal. And just because a bank offered a good rate to one of your friends doesn't necessarily mean that you can even get the best rate or the same rate as them. First, this depends on your specific financial situation, and secondly, also on the bank itself. It is perfectly possible that a bank handed out too many loans in the first part of the year, so they can't give out much more in the second part. What do then? They up their price of loans or their interest rate to make it less attractive for home buyers to borrow money from them. This means that you really need to do some bank shopping to get the best possible rates. Now, with the lowest offer in hand, you repeat this process over and over and over again until you have just a couple banks left that offer roughly the same rate. Now it gets real tricky because the lowest rate doesn't necessarily mean that it is the best possible investment. And for this, you really need to do your own homework. Think about it from the perspective of the banks. They won't make that much money anymore with the low interest these days of your interest payments. So they need to make money somewhere else. They will make money by selling you other products that they also offer along with the home loan. Some examples are car insurance, having a bank account that may cost money, pension saving, or transferring all your investments to the bank, or even fire insurance or home insurance. And fire and home insurance are in most cases here in Europe actually mandatory, but the coverage and the cost of this can really change a lot depending on where you get that insurance from. Also, a big one, especially here in Belgium, is a requirement to take out an outstanding balance insurance. Basically, this is a form of life insurance. They usually ask you to pay this in either a lump sum investment or a fixed amount every single year for 2/3 the term of the loan agreement. So in the case that you have a loan for 25 years, this usually is 16 years that you need to pay that amount every single year. The advantage, however, especially if you have a partner, is that in the case that either of you should die, then the other person won't have to pay back the loan anymore and the mortgage is automatically either paid off or the outstanding balance is cut in half and you only need to pay back half anymore. This depends on your coverage with your life insurance, of course. Even though this insurance isn't legally required, even in Belgium, a lot of banks will ask you to take out an insurance like that with them to get the best possible rates. However, these costs may vary wildly depending on where you get it. So, depending on all these side products, it really depends which offer is actually the best, and here it is important you do your own research and really read the fine print before you sign anything. But finally we have the question, should you loan for 20 or 25 years? And here the answer is actually pretty straightforward nowadays. Loan for as long as you can. Why is this? Well, we have been sitting here with low interest rates for quite a while now, and chances are you are going to be able to put the money that you earn to better use elsewhere within other investments, like for example the stock market. So it makes more sense to loan over a longer period. Also, in the case of life insurance, like I mentioned previously, you are only covered for the duration of the loan. So in this case, it actually makes sense to make the loan as long as possible, so you are covered as long as you can. But that is basically it. A lot depends on your local laws, taxes and regulations, so I can't say much more about that. But the thing here is to really do your research, since, as I mentioned previously, it can save you an enormous amount of money for a relatively low time investment. So take the effort, and I hope you all get a good rate. Thank you so much for watching this video. If you liked the video or didn't, doesn't matter, leave a like down below. And if you have any questions, feel free to put them in the comment section and I will respond to them as well. And then all that rests me is to wish you happy bank shopping. Bye.